Through 3 years of coaching, I realized there is 7 main myths that every single beginner trader believes, and it absolutely destroys their results. But if we can fix these false beliefs, they can get consistent, profitable almost instantly and get results like this, this and this. And I can guarantee you, there is more than one myth that you still believe in, and it's most likely the reason you are not funded yet. But just as a teaser, in the last point I will explain why using multiple time frames may be the reason you are still losing on the market. So if you're doing multi-time frame analysis, you really don't want to miss that. The first myth is the most common misconception among beginner traders. I went through it myself, and it did set back my trading for several months because I was constantly changing strategies after I had more than 2 or 3 losses. So if this sounds familiar to you, pay close attention. Let's imagine there is 2 strategies you can use. One has 70% win rate and one has 40% win rate. Which one is more profitable? Well, most likely you said the 70% win rate one, obviously, but win rates mean nothing without context, and that missing context is risk reward. If the 70% win rate strategy has 1 risk reward and 40% win rate strategy has 4 risk reward, then you will be much more profitable with the lower win rate strategy. 70% win rate and 1 risk reward in 100 trades, you will make plus 40 R. With 40% win rate and 4 risk reward in 100 trades, you will make plus 100 R. So 2.5 times more profit with a much lower win rate. Most beginner traders are obsessed with win rate, while the big money will come from the risk reward. However, I do admit that higher win rate has its benefits, especially if we are not too experienced on the market just yet. Mentally it can be hard to deal with higher drawdown, which comes with the lower win rate, but I still recommend to trade with at least 3 risk reward, because risk reward will be the key to unlock high profitability. Just look at my trades. I make between 10 to 20 R with every win I get. One win will give me 1 month worth of profit. If I will trade with 1 risk reward, I would need to have 20 win to get the same amount of profit that I got here with only 1 trade. This is the power of risk reward. So hopefully now you understand why you don't need to win every trade to succeed in trading. The next myth is the second most common misconception which beginner traders have, and it causes them to think they will need to double their account or make some crazy gains every month to be able to make a good living from trading. But I will break down some simple math and you will be surprised how easy actually is to make a really nice amount of money. Let's say we want to make 20k a month from trading. So we have our income goal, but we need a plan to get there. So now the question is, in terms of percentages, how much profit will we need to make to get 20k a month? Well, only 7%. Now you might think that you will need a huge initial investment to do this, but no, it will be around 2k only, and I will explain how to do this exactly a bit later. But what is even a realistic monthly return that you can shoot for as a trader? I tried many strategies back in the day, many time frames, everything you can think of, and in reality I always got around the same monthly results, which I will reveal shortly. But first let's understand why is this happening. Let's say you go down to the 1 minute time frame. You may think you will be able to take like 5 trades a day. Meanwhile, if you are trading the 15 minute with the same strategy, you are only getting 5 trades a week. So on the 1 minute you will get 5 times as many trades, so you will make 5 times as much money. But in reality it doesn't work like this. You don't consider spreads on the 1 minute, commissions. In general, you will also get lower win rate with the same strategy on the lower time frames, and you also don't understand how mentally demanding is to hyper focus even for just 2 hours on the charts every day. So what was the average monthly returns I got with different strategies, different time frames, which I think is still realistic and achievable for everyone? It was around 10 to 15 hours a month if the strategy was good, or around 5 to 10 hours if the strategy was not so good. So in my experience, with 1% risk, with a very good strategy, you can make around 10 to 15% a month on average. But even with an okay strategy, you will be able to make 5 to 10% a month. Now we know what is a realistic return, what we can expect. But the real question is how we will make 20k a month with just a 2k investment. Well, this is where prop firms will come into play. If you buy 4 100k FTMO challenge, that will cost you a bit above 2000 euros. For this price, you will have an overall of 400k capital. Once you pass the challenges and already trading on the funded account, you will get 80% profit split for the first few months, which then will get increased to 90%, but we'll do the math with 80% now. So let's say you made 7% on the 400k account. That is 28k. Now your profit split is 80% out of this 28k, so that will be 22.4k. You made 22k with only 7% return in a month. This is the power of capital. Instead of trying to squeeze out every little less percentage from your strategy. So this is why you don't need crazy returns to make good money. This myth destroys every trader's soul. I've seen it time and time again through coaching, and I went through it myself too. When it happened to me, I needed to take a break for a few weeks from trading because I was so heartbroken and mad, and I didn't understand what's happening. I truly wish someone would have explained this point to me back in the day. You create a strategy, you really like it, you are making good money with it on a demo account, so you are ready to bankrupt the prop firms. As we discussed earlier, you only need 7% to make more than 20k a month, and you are making even more on the demo account. This will be easy money. And once you start trading the challenge account, all of a sudden something changed. You are making mistakes, you are stressing about the trades, looking at your phone constantly, you don't understand what's happening. The strategy was profitable on the demo account, but not when you really need it and really could make money with it. What is going on? Well, you are not alone experiencing this, believe me. I think every beginner trader experienced this at some point, including me. I was arrogant and did think that just because I made some profits on a demo account for a month, I will make hundreds of thousands of dollars in the next few months. Then I lost my first challenge without even being in profit for a minute. It's very different when you have real money on the table. There is real risk involved. You could make real money with trading. The strategy is still profitable if you haven't changed anything about it. It's you who are using the strategy differently. It's you who are making mistakes. Many traders don't believe how different is trading for real money than trading on a demo account. And as I said, I was the exact same. I was overconfident, but the market humbled me pretty fast. To counter this phenomenon, the only thing you can do is to create a strategy which is very simple and has rules for every single scenario. Even then, most likely you will still make mistakes as a beginner, but at least you will make less and you will be able to learn from them. So hopefully next time you will not make the same mistake, which should be our goal as a beginner trader, to learn constantly. So to sum this up, I know it's hard to believe if you haven't traded a real account just yet, but being profitable on a demo account does not guarantee real life success at all. This next myth is why many smart money traders fail on the markets. They might have incredible results on backtesting, but when it comes to live trading, something suddenly changes and they can't make any profit. Many traders like the idea of a fancy strategy which has 20 rules. You need to trade on 3 different time frames with 5 indicators, because if a strategy has all of this stuff and looks exciting, surely it will be profitable. And I understand why someone would think this, but they couldn't be more wrong, because this is the main reason why traders can't stick to their strategy. So I will explain the solution to this soon, but first we need to understand what is the problem with really complex strategies. But before that, I need to tell you a harsh truth. Complicated strategies are not more profitable than simple strategies. You may think I'm crazy, but hear me out. The more confidence, the more entry criteria, the more rules you add to a strategy, while the win rate will increase, which sounds good on paper, and you may think you created the best strategy ever, you will have a pretty big surprise once you start to follow the strategy on the real market. Because with every single added rules, by default, you will decrease the amount of trades that you will be able to take. So you may think you are a genius because you added 3 more entry criteria to the strategy and the win rate did increase by 15%. But now we will get 2 trades a month with this genius strategy because there is so few setups that is aligned with your rules. So overall, while you increase the win rate, you massively decreased the volume of trades, which means in almost all of the cases that you will make less money. But there is another problem with using complicated strategies which can absolutely destroy your trading results, and many smart money traders are experiencing it even at this moment. You can have the best, most profitable strategy in the world. If you can't follow it consistently over the long term, then sooner or later you will blow your account. And if you have a very complex strategy, it will be extremely hard to follow without mistakes, especially as a beginner under pressure. So while many traders think the more complex is the strategy, the better, in the real world it is exactly the opposite. Myth number 5 is something that every single beginner trader thinks is true, and it can hold them back dramatically because they will chase after trades which will lead to overtrading, and overtrading will most likely lead to a blown account. There is 2 main ways you can make more profit profit on the market. Either you need to increase the volume of the trades, therefore the volume of the wins, or you need to make your wins worth more. And most traders choose to increase the volume of trades, which can be a horrible mistake, because if you are not careful, you can destroy your profitable strategy without even realizing it. See, most of the time to increase the volume of trades, you will need to take the not high quality setups too, which will decrease your win rate and increase your drawdown. So in the end of the day, it's not necessarily worth it. Not even talking about the fact that more trades will mean more time on the chart, more psychological pressure to deal with, more room for error, and so on. But to really drive this point home, let's compare my own strategy with a one risk reward strategy, which you would get a trade with every single day. Let's say the one risk reward strategy has 60% win rate, which is realistic. So let's say there is 23 trading day in a month with 60% win rate. This would mean 14 wins and 9 losses. So the average profit will be 5R in a month, taking one trade a day, so around 23 trades. Now let's look at my own strategy. I have around 40% win rate, not including break-evens, and the average risk reward is 12.7. Let's say I take only 3 trades a month. One of them will be break-even, so let's do the math with the remaining 2 trades. We need to multiply 2 by 0.6 to get the amount of losses, because we have a 40% win rate as we discussed. So this will be 1.2 loss on average in a month. Now to calculate the profit, we need to multiply the 2 by 0.4 to get the average number of wins in a month, which will be 0.8. And then we need to multiply this number with the average risk reward, which is 12.7, and we'll get one average of 10.2R net profit in a month. So 10.2 minus the losses, 1.2, is exactly 9R. So taking only 3 trades in a month and one of them being break-even, we will make almost double of what we would make with 23 trades and one risk reward. Not even talking about the commissions you will pay for 23 trades. Those small costs will add up too. So the main lesson here is that more trades does not equal more money. This myth is the main reason why most traders constantly changing their strategies, and strategy hopping is one of the biggest cause of people losing money on the market. I remember when I started learning to trade, I tried so many different strategies, one strategy after another. If I had more than one loss with a strategy, I was instantly looking up the next one on YouTube, thinking that the strategy I was using is no longer profitable and the next will be better. I was constantly searching for the one magic strategy which will make me a millionaire, and it took insane amount of wasted time and a lost challenge to realize what should I focus on. But you are in a much better position than I was, because if you understand why you keep changing strategies, which I will explain shortly, you will be able to save years of your life and a few blown accounts. Over the years of testing out different strategies, different time frames, everything you can think of, I realized one thing: if you trade a simple trend following price action strategy, there is almost no strategy that will not work. Some will make more money and some will make less money, but overall you will not lose money with them over the long term if you will be able to stick to them. So this is nice to know, but the real question is how you will be able to stick to a strategy. First, you will need to backtest it properly to see what you can expect. If you like the backtested results, you will need to use it for at least 1-2 months on a demo account to gain some confidence in the strategy and to be able to add or delete any rules that is necessary. Personalize the strategy for yourself without having the pressure of a live account. Once you did this, you are in a much better place, and most likely, as you did put so much effort and time into the strategy, you will not switch it after 1 or 2 losses just to do this whole testing process again. There is no magic strategy. You just need to find one that you like and can stick to. Also, this is one of the reasons why good mentorship can be very beneficial, because you pay for it, there is some input bias, hopefully you get a good strategy, and because you pay to learn the strategy, you will at least try to stick to it as long as possible. But if you would have no money to spend currently, I created a totally free course which also includes the strategy that I passed my first FTMO challenge, but not just that, also many different topics from base technical analysis to trading psychology, and there is even more value because we have a supportive community where you can post your struggles, post your wins, get feedback, get motivation. I am also active in the group, giving you guys free help, so if you will want to join, the link will be in the description. But before you will join the free course, stick around for the last lesson, because it will change how you look at the charts forever. When I was a beginner, everybody was saying that multi-time frame analysis is a must. Without going from the higher time frames to the lower ones, you can't have a profitable strategy, and so on. So I started doing multi-time frame analysis, and I felt like I have a pretty good understanding where the market will, or rather should go. The whole top-down analysis made sense. But then once I started trading on the real markets, even on a demo account, I started to have some difficulty with it. Many times I was not sure what is the trend. I was not even sure if I would need to look for buy or sell opportunities. Back then I didn't have the experience to realize where is the problem and why looking at multiple time frames are not necessary to have a profitable strategy. But if I would have known what I know now, it would have saved me a lot of time and a lot of headache. Let's start off by understanding that multi-time frame analysis is not a must. It's just one more confluence to the trade. It will increase your win rate just like any other confluence does, but that's it. And we already talked about this in this video. I will not go into it again, but think about how many trades you will not take just because on the higher time frames it's a counter trend, how many wins you will miss out on. And if you trade with high risk reward, I am 99% sure that it will not worth it, even if you just look at the numbers. But there is also one more problem with multi-time frame analysis, which is an even bigger problem than just losing out on some wins. And that problem is that you will have much more complexity added to the strategy, and you will have much less confidence while taking the trades. Let's say on the 5 minute it's an uptrend, on the 50 minute it's a downtrend, and on the 30 minute it's an uptrend. So what should you even do now if we are trading the 5 minute time frame? One time frame higher is a downtrend, so maybe you should look for sell opportunities. But how could you look for sells if we are trading on the 5 minute? But also 2 time frames above on the 30 minute the price is still in an uptrend, so how relevant is it? Because it's 2 time frames above, not one. You see, it's just a mess. I became funded trading one time frame only, and I'm still trading only one time frame. Every strategy I'm teaching is based on only one time frame, and there is a reason for that, because it just works. It's more simple, and if you trade with high risk reward, it's more profitable to use only one time frame. Higher time frames can be good to identify key support and resistance levels, for example, but I would not use them for anything else. So we debunked the last myth too, which was that you need to use multiple time frames to have a profitable strategy. So now we know the 7 main myths that many traders believe in. And by the way, I would like to know which myth were you believed in, so feel free to comment it, but knowing the myths alone will not make you profitable. This is why I created this video, where I talk about the 7 things I learned after 6 years of trading, which will give you a much deeper knowledge about the market and a good idea of what to focus on next.